Is it possible for a digital asset to collapse in a clear falling trend, flash aggressive sell signals across the board, and yet still be fundamentally undervalued by the market? Or are the investors trying to buy this dip stepping straight into a financial buzzsaw? Today, we are diving deep into a highly specific token that has taken the sports crypto world by storm, drawing massive attention but leaving a trail of mixed signals in its wake. The Royal Spanish Football Federation fan token, trading under the ticker SPAIN. This asset is sitting at a very unique spot right now, ranked at number 3,783 on global tracking indexes and trading at precisely $0.6701. Over the last 24 hours, it has posted a modest bounce of 1.91%, but that micro rally is happening against a backdrop of intense broader volatility. Before we tear apart the charts, look at the key support floors and expose why retail traders are getting absolutely trapped in this asset, do me a quick favor. Hit that like button right now, subscribe to the channel, and make sure to turn on all notifications so you never miss these deep dive breakdowns. Also, it is absolutely compulsory that you leave a comment below. Let me know your exact game plan. Are you holding Spain? Are you shorting it into the ground? Or are you staying far away? Drop your thoughts because I read every single one. To truly understand why the Spain token is in the spotlight, we have to look at what this digital asset actually represents and how the underlying organization operates. The Royal Spanish Football Federation manages one of the most successful national soccer structures on Earth. Fan tokens are designed to act as a bridge, giving holders exclusive voting rights on minor team decisions, access to VIP rewards, official merchandise discounts, and unique interactive experiences via blockchain platforms. It is essentially a monetization and engagement tool for a global fan base. But why is it in sharp focus right now? It is all about structural timing. When a massive national team participates in major global tournaments or high-profile matches, these tokens experience a massive influx of speculative volume. Traders rush in, hoping to trade the hype of the games. However, when the initial hype settles, the token is left struggling to maintain its baseline value, turning it into a battleground between short-term speculators and long-term sports enthusiasts. Let's shift our focus entirely to the technical analysis because the price action is telling a brutal story. When you look at the macro view, the Spain token has been locked in a persistent grinding falling trend. Every single attempt to rally over the last few weeks has been met with heavy selling pressure, creating a classic pattern of lower highs and lower lows. Right now, the price of $0.6701 is hovering just above a critical short-term support level. If the bears manage to push the price below this current floor, there is a massive air pocket beneath it, meaning the downside acceleration could happen fast. On the flip side, if you are looking for signs of strength, the key resistance level is sitting significantly higher. For the token to prove that this 1.91% daily gain is anything more than a dead cat bounce, it needs to break through that resistance with massive sustained buying volume. Currently, momentum indicators like the Relative Strength Index are flashing short-term weakness. The token is pinned in a bearish control zone, meaning sellers are dominating the order books on any minor price bump. There is a complete lack of sustained buying momentum, which tells us that the immediate trend remains heavily weighted to the downside. This brings us straight to the technical ratings and analytical signals. Across major algorithmic models and trading indicators, the overwhelming consensus for the Spain token is flashing a sell, with several strict systems screaming a strong sell. These negative signals are fueled by the asset trading below its key moving averages. When a token fails to hold its short-term and medium-term moving averages, it indicates that the path of least resistance is down. The short-term outlook remains highly defensive. Unless a sudden external catalyst injects multi-million-dollar liquidity into the asset, the mathematical model suggests that the downward drift is highly likely to continue. It is a highly dangerous environment for anyone trying to time the absolute bottom. This sets up the classic dilemma. Is the Royal Spanish Football Federation fan token truly undervalued, or is it a textbook value trap? The crowd calling it undervalued argues that the brand equity of Spanish football is massive, and a sub-dollar price for an official federation token seems fundamentally cheap. But the reality of crypto fan tokens is far more complex, and this is where the value trap emerges. A value trap occurs when an asset looks cheap on paper, but continues to drop because it lacks the continuous utility or structural demand to drive the price back up. Once the tournament speculation clears out,
There simply aren't enough daily buyers to absorb the constant supply of tokens being unlocked or sold by early participants. This leads directly into the underlying risks and the harsh reality of why retail traders get trapped in these setups continuously.
The biggest risk here is extreme liquidity fragmentation and severe volatility. Fan tokens often suffer from thin order books. When panic hits, the lack of deep liquidity means the price can drop 10% or 20% in a matter of minutes, leaving retail traders completely unable to exit their positions at their desired stop loss levels. Retail traders often get trapped because they buy into the emotional connection of the brand. They see the name of a world class football federation and assume the token will mirror the prestige of the team on the field. They buy the asset during a minor 2% green day, thinking they are getting a discount without realizing that large scale market participants are using that minor liquidity pump to exit their own heavy positions. To look at this objectively, let's break down the realistic bull case versus the bear case. The best case recovery scenario for the bull case relies entirely on an explosive external catalyst. If the Federation announces a massive overhaul of the token's utility, such as requiring the token for actual match ticket allocations or high-end physical experiences, it would force a structural shift from speculation to actual utility demand. Combined with a sudden win streak on the international stage, this could trigger a violent short squeeze, driving the price back up toward previous resistance levels and invalidating the bearish structure. The bear case, which represents the worst case continuation lower, is a slow, painful grind downward. If trading volumes continue to dry up and fan engagement shifts away from the platform, the token will likely break its immediate support level. In this scenario, the token becomes completely illiquid, the falling trend intensifies, and the price bleeds lower into deeper fractional sense as remaining holders throw in the towel. Looking at the broader outlook, we have to separate the short-term chaos from the long-term perspective. In the short term, the asset is trapped in a defensive, high-risk cycle dominated by technical weakness and negative sentiment. Expect choppy, downward bias price action over the coming weeks as it tests the resolve of the remaining buyers. Long term, the survival of the Spain token depends entirely on whether fan tokens as a sector can transition from speculative digital merchandise into permanent, indispensable ecosystems for sports fans. If that transition fails, the long-term viability of the asset will be under immense structural pressure. Ultimately, we are left standing on the edge of massive uncertainty. The charts are flashing clear warning signs, the indicators are leaning bearish, yet the sheer power of global sports branding keeps a glimmer of speculative hope alive. Is this current $0.6701 level the final accumulation zone before a massive turnaround, or is it just a brief pit stop on a long slide down to zero? Remember, this discussion is entirely for educational and informational entertainment purposes, and none of this constitutes financial advice. Always do your own thorough research, manage your risk parameters with extreme discipline, and never trade with capital you cannot afford to lose. But the ultimate question remains, if the support breaks tomorrow, will you be left holding the bag? Or will you look back and realize the warning signs were staring you right in the face?